You can still get a $5,000 personal loan even if you have bad credit and a lot of debt, but only if you implement this 3-step strategy. The first thing that's going to help you get approved for a loan is obtaining and reviewing your credit reports. When you apply for a loan, lenders are going to be looking at more than just your credit score. That's why it's important for you to know what's hurting your score, what's actually in your report, and what lenders care about. Lenders want to know things like how much debt you have, the amount you owe, if you have any late payments, and how long ago these late payments were. And you can see all of that in your report. And real quick, I wanted to give a breakdown of what factors make up your credit score. 35% of your score is based on paying bills on time. That's why you need to know what missed payments are showing up on your report and when they happened. They can stay on your report for up to 7 years, but they also have less impact over time. By the way, in our next video, we'll cover some credit repair tips that can help boost your credit score instantly, so make sure to subscribe. 30% of your score is based on the amount of money you owe, aka your debt. Typically, you want the total amount of debt to be under 30% of your income. Anything higher than that could lower your credit score. The age of your credit accounts makes up 15% of your credit score, which is why it's so important to keep existing credit accounts open and active instead of closing them, and avoid opening too many new accounts at once. And the remaining 20% is based on your credit mix, which comes from factors like how recently you opened a new credit account and the different types of credit accounts you have, loans, credit cards, things like that. After checking your credit score and report, it's important to set realistic expectations. If your credit score is below 600, chances are $5,000 will be closer to the upper limit of what you'll get approved for. There are tons of sites like NerdWallet, Bankrate, and LendingTree that might make you think you can qualify for $50,000 loans with a 300 credit score, but this isn't the case, and we talk more about that in this video. To get your credit report, go to annualcreditreport.com. It's free, and it will give you the most in-depth credit reports from all the major credit bureaus, Equifax, Experian, and TransUnion. So now that you have your credit report, here's how you can use it to help quickly raise your credit score and then get approved for a loan. Well, most people don't know this, but you can dispute errors on your credit report, which could instantly boost your credit score from 10 to 100 points. It depends on the type of error and what your credit score is, but there are instances where credit reports show you owing more money or having missed payments that you definitely paid on time. To dispute errors, collect any supporting documents that prove the inaccuracy. That could mean bank statements, payment confirmations, or any other relevant correspondence that shows this debt isn't yours. Then visit the website of the credit bureau where the error appears, which will probably be one of these. They each offer an online dispute process where you can submit your evidence and a detailed explanation of the mistake. Once submitted, the mistake should be removed within roughly 30 days. But you can get the process started today. If your credit score is 100% accurate and it's still not where you want it to be, there is another thing that you can do that most people don't know about, which is negotiating your debt down. If you have debt that you couldn't pay back, you probably have a collection mark on your account, and it's weighing down your credit score heavily. But you can fix this even if you don't have the money to pay them back completely. Let's say you had $1,000 on a credit card and you couldn't make payments. After months of trying to collect their money, the bank says, you know what, I don't think we're getting our money back and it's not worth our time and effort to try and collect. So they call a collection agency to buy the debt. The collection agency says to the bank, we'll give you $100, and in exchange, we own the rights to this person's debt, so they owe us that $1,000 if they ever pay. The bank is happy they got something from the situation, and the collection agency turns its focus to you. They are known for being persistent with phone calls and letters, and it can be pretty intimidating, as I'm sure you already know if you've been in the situation before. Collection agencies won't tell you, but this is something they might offer. Hey, just give us a portion of what you owe us and we'll call it even. One of my friends had a collection on his account for over a year and it hurt his credit score by over 100 points, which made it really difficult to get a new apartment. So he called the collection agency and said, listen, I can pay back 80% of what I owe you if you remove the mark from my account. And a few days later, they agreed in writing. Again, make sure it's in writing or there isn't proof you had the conversation. Now, some collection agencies won't accept this offer and won't remove the mark from your credit report. If they refuse, there really isn't a benefit to paying them back, but it's worth giving it a shot because it really is in their best interest to get some money back. And this next step could be the fastest and easiest way to increase your chances of loan approval. And that's getting a guarantor or cosigner. Even though the previous steps may eventually allow you to secure a loan on your own, having a cosigner or guarantor can significantly speed up and strengthen your approval chances if your credit is still in the improvement phase. Here's the difference between the two. A cosigner signs the loan alongside you, sharing equal responsibility from the get-go, while a guarantor's obligation often kicks in only if you fail to make your payments. Both roles carry serious legal responsibility because if you default, the burden falls squarely on them, and any missed payments will hit their own credit just as hard. Ideal candidates for this role are individuals with a minimum credit score of 670, but a score in the 700s is even better. Keep in mind though that while enlisting support can fast-track your loan approval, it also means that any failed payments will affect not only you but also the person helping you out, which can put a major strain on personal relationships. Ultimately, if you follow the rest of these actionable strategies, you should be able to reach a point when you qualify for a loan on your own. But until then, having a trustworthy cosigner or guarantor can make a significant difference. The last option for getting a loan fast is applying for a loan with CreditNinja, which is known for their easy application and fast delivery of funds, sometimes even same day. They offer loans as high as $5,000 to people with less than perfect credit, and the application and loan approval process is all online, and instead of digging into your credit, they use a process called instant bank verification, which you can learn more about here. They have thousands of 5-star reviews on Trustpilot, and it's a great option for you to access the funds you need in a pinch. The link to apply is in the description. I hope this helps, and we'll see you in the next video.